Hi, this is Adam Kuleb, and in this video, I will be talking about credit and why it matters when you're buying a home. Your credit score matters when you're buying a house. If you have a high credit score, you're going to get lower interest rate. Generally speaking, above 720 is really good credit score. I don't like to say that there's a minimum credit score, but there is a minimum credit score for FHA and conventional financing. If you have a really bad credit score, I don't want you to lose hope. There's always a way to improve it. There's always a way to fix your low credit score. Generally speaking, for FHA loans, it's around 580 for a minimum credit score to qualify. However, even if you don't have a credit score, if you have a really bad one, there's still some ways to buy a house. There is some owner financing options, and there is some other creative finance options that we offer, but they're very limited. So generally speaking, try to get your credit score as high as it can be. And in this video, we'll tell you how is your credit score evaluated and what you can do to fix your credit score. Your credit score depends on 5 factors. We'll briefly discuss them and how you can improve them. Number one is your history of payments. Have you been paying on time, or do you have missed or late payments? If you've been making your payments late, anytime you make payment more than 30 days late, it's going to bring your credit score down. So the history of your payments plays the biggest role in your credit score. It's the most important factor. The best way to fix this is just make sure that everything's set up on auto pay. If you have credit cards, if you have an auto loan, set that up on auto pay because it's going to help you a lot to avoid missing any payment. The second most important factor is credit utilization. Credit utilization is about how much of your credit are you actually using. Let's assume you only have one credit card and you have a $10,000 limit. If you're using $1,000, that means that you have 10% utilization ratio. The higher your utilization ratio, the lower your credit score will be. This is one of the easiest ones to fix because when you pay off your credit cards, if you have a high balance on your credit cards and you pay it off, your credit score will improve dramatically. It's a very quick thing. Within 30 days max, you're going to see a significant improvement if you have a high utilization ratio and you bring it down. Very easy to fix, very big improvement that can happen quickly. The third point is the age of your accounts. So how old is your credit account is? Usually your oldest credit card plays a big role because if somebody has been managing their credit cards very well, but they've only had credit cards for 2 years, does not show the same credit worthiness as someone who had them for 20 years and has not missed a single payment. So the older your credit accounts are, the better your credit score will be. There's not a lot of things that you can do about them, but usually there used to be some hacks around this. Maybe we can discuss that. Let me know if you have questions about it. But that plays a big role in your credit score. The fourth point is new credit. If you have a lot of new accounts, that's going to bring your credit score down. Think of that as new car loan. Did you get a car loan in the past month or two? That's going to negatively impact your credit score. Even though you got approved and you're paying on time, it makes you a riskier borrower in the eyes of lenders. So when you're shopping for a home, don't go open up a new credit card. Don't go buy a new car. There are people actually that get disqualified because they are about to purchase a home and they are getting ready. And they actually, even after they get under contract and they get pre-approved, they get disqualified because they opened up a new credit card to buy some furniture at a furniture store. They purchased that $3,000 couch that they really liked on a credit card. So a really important thing to do is do not buy new cars, do not buy any new furniture on credit cards till you are approved for the house, till you get the final approval and you get the keys. This unfortunately have ruined so many closings in the past. People that got pre-approved, people that got so close to owning the home and they lose it because they just messed up their credit score. If your credit score is really high, you really don't need to worry about that because it might ding you a little bit. But if your credit score is right at the edge, don't do it. The last point, the fifth point is credit mix. Uh, Ideally, you want to have some diversity in your credit profile. So you want to have some auto loans, maybe some past mortgages that you paid off, or some credit cards that you had. The more diverse your credit um, profile is, the better your score will be. This is not one of the big factors, but it does make a difference. Kind of pissed me off in the past. I had like 3 or 4 credit cards, and my credit score was like low 700s, and I wanted to get into that 800 mark. I did some more research, and I figured out that the only issue I have is that my credit cards are all what I have. I don't have any auto loans. I don't have any mortgages. And that's what made me have like good credit. It wasn't great. So again, this is the smallest factor, only impacts you 10%. 10% of your credit score depends on it. So it's only 85 points. It's not something that you need to worry about too much. The first 2 points that I discussed are the most two important points. If you have any negative remarks on your credit score, as let's say bankruptcies or late payments, you need to reach out to me. I'll connect you with a company, or I'll recommend actually multiple companies to you, and you can choose who you want to work with. But there are companies out there that specialize at, like, if you have fraudulent inquiries, if you have any missed payments or late payments in the past, they can work with you to get these removed from your credit score. A lot of times people can see 30 or 40 or even 100-point improvement within 30 days if they're working with the right professionals and if they're working with the right loan officer. We'll discuss more about loan officers in the next video that I want you to pay attention to, because working with the right loan officer can make things a lot easier. All right, bonus tip, guys. If you are in the military, or you have served in the military in the past, or you are a victim of identity theft, send me a message. I'll be happy to help you. You have some additional protections, and these can help you if your credit score is less than ideal now. Let's get to the next video where we'll discuss loan officers, how to find the best loan officers, and how to work with them.